When the market structure is looking like this, it's actually fairly easy to find the key level that prices will react on. And when the market is bouncing from the support 3 times like this, at this point you cannot argue with the market. The market tried 3 times, actually 4 times if we count these lows, to go lower and failed all of the times. And in this situation you have to forget about going short, because market clearly gave you enough information that we're not going lower. Not today, not now. So it's no surprise that prices bounce from here. So first thing you need to do, obviously, as always, you need to try to find the trend lines, the key entry points. And I didn't mark any setups right here because it was still too early for, daily session. Market opened around this point, 15:30 my time. But there is a clear trend line working higher. You can see the prices bouncing off the trend line, bouncing off the EMA. We are working higher from these lows. And the first setup I've marked was this setup. You can see we made it to the top of the range day. We are working lower. We have a break and a new low. This is only a first entry. We didn't tick above this bar, so you cannot treat this as a second entry, although it is very, very close. And you are waiting for a new high of this trend line. And the fact that we bounced 3 times from this key level, the bulls are very strong in the market, so you definitely need to be looking opportunities to go long. So we have a break and a new low, the correction. You have a bounce from the EMA, and you are looking to get a new retest of extreme, this trend line. So this is the trade that you need to take. It's okay, this is a first entry. You don't have to wait for second entry because it was very close. Prices did make a new high. It was kind of, the resistance was acting a little bit strong here. But you get this two-legged pullback to now this forming support. And the reason why I'm so keen into taking longs today, because the key level is clearly showing me that bears are very, very weak today. The fact that all of these longs hold this line, you really need to pay attention to this, and you cannot argue with the market. You cannot go short because bears, they have no strength at this point. So there's a new high. This high is higher than this high, and you have a first leg working lower, pullback, second leg working lower. This is two-legged pullback to this support that is now forming. Always remember, market moves in twos. It was very close here. First leg, pullback, second leg, first leg, pullback, second leg. So I think this was a good setup because this is the bullish boss is very good, very strong here, and you got room to this resistance. So I think this is a good trade that you want to take. And now it's kind of looking very, very range like small trading range. At this point, the support is confirmed. 3 bounces from here, triple bottom. I mean, you cannot, this is a no-brainer. You have to take this because this is a one-time opportunity. Market is clearly showing you that the support here is holding. So this was a no-brainer. And the way you should trade the trading range, just like I always tell you, you fake the breakout. And look at this, no surprise, the breakout below the trading range failed once again. You have a trading range working lower, you fake all these stops, and the price is reversed on them. What they're trying to do here is basically fake out weak longs. People who are not firmly entrenched in their beliefs, that market is probably going higher. That's all they did. They fake out weak longs, but it's actually a shame that there is no setup for us as a day trader to go long here, because this bar is just way too bearish still, and you're just kind of chopping and not really great of a bars here. So unfortunately we had to let it go, even though it is a failed break lower, and most breakouts of trading ranges will fail and happen here once again, and it is in the direction of a trend. If you work higher into trading range, most likely you're gonna continue going higher. So the failed break was good here, price action rules work, but unfortunately the signal bars are horrible. It all depends how good the signal bar looks on your chart. Just because it looks bad on my chart doesn't mean that, you know, it wasn't a good setup on your chart. But, you know, just remember how you trade these trading ranges, and you fade the breakouts, and it worked right here once again. And the market just shot up higher, you know, no brainer, no looking back. You get a 2-leg pullback to the EMA, first entry pullback, second entry. You can see that the trend line is holding. You don't have a retest and a new low, but I have marked this regardless, because at this point the market is really, you know, really proven that, you know, bears are very weak. Look at the resistance, you know, we shot through, you know, like it's not even there almost. And still I'm thinking long based on this, my first initial information, that the bulls are very, very strong here. This is a telltale sign that bears have no control over the market today. So this is how I'm playing this basically. You know, what happens on the left side of the market is important, you know, don't forget that, because everybody who's looking at the chart is looking at the left side too. So you get a 2-legged pullback to the EMA. It is a second entry in an uptrend. And this is the first leg working higher, and this is the second leg working higher. So at this point, I'm still thinking we get a little bit more room. You know, there's still a little bit of steam left. So, you know, when the trend is this strong, and this is a clear, you know, very strong trend, it's almost too strong, because ideal trend, let me show you guys, ideal trend is looking like this, something like 45 degrees. This is an ideal trend, working higher, you get a little bit correction, working higher. This is too steep. Once we made this second leg working higher, this is way overdone, way overbought, and this is way too steep. So you gotta expect a correction. The healthiest market is 45 degrees. Remember this, write this down somewhere. This is way too steep of a market. And this is, once again, by the way, I showed this measured move. This is how I sometimes, you know, try to track my runner. If you're holding a runner, which a lot of times on these failed breakouts, you will get a good runner, because this is the lowest point of entrance that you get. You know, only skilled professional traders take this point, because the market looks like, you know, the bears are strong here, but no, you're trading price action rules, and you know that most breakouts will fail. So you basically get an advantage. You get as earlier entry as you can possibly get, and this is how you can use the measured moves. If you're holding a runner, you know, you're probably, you know, having these thoughts, you know, where you should exit, where you should take your profits. Well, the first thing is just the measure to the first leg, put it right here, and just expect, you know, to take your runner somewhere around here. You know, as you can see, this was a good goal, because you just missed a few more points. At this point, you know, it doesn't matter, you're never gonna get, you know, full runner. So, you know, stop beating yourself over that. You know, the runner will always be like 70% of the move you can get, so be happy with what you got. And then the market just spiked down lower. Unfortunately, there's no, you know, setup for us. You know, we want to take high probability entries, so this is just a bunch of first entries. We're not even to the EMA, so I don't like taking these, you know, not that high of probability setups. I really want to wait for good setups. I really want to have my win percentage high. And you can see how important it is to locate the key levels, because the prices bounce, and once again, look at this, to the take, they retested this previous support and bounce higher once again. You know, the prices, you know, there's a rhyme and reason for how the market acts. It's not random. You know, people will tell you it's random. Definitely, market is not random. Don't, you know, just because they cannot understand how the market moves doesn't mean the market is random. You know, screw those people. Market is definitely very valid. Market geometry is valid, and you can learn to read the chart, what they're doing. So we have this trend line working lower. You have a little bit of break and 2 legs to a new low. I don't think you want to go long, because there is no setup. Maybe if your chart had a better setup, you want to go long here, because this is clearly a test of this key level, and you know how I like these key levels. It was actually tempting to go short here, but you had a break of this trend line. It was still a bit tempting because the break is not that clear, but at this point market is, you know, starting to chop into this small congestion. Look at this, 1 2 3 4 5 6 7 8 9 bars. EMA is flat. Look at this. I made a video about the EMA, and look at this. This is exactly the case here. EMA is flat and it's in the middle of those bars. So you kind of want to stay out of this mess. And once again, the best way, you trade the congestions. Basically what congestion is just a small trading range. You fade the breakout, and once again you fade the breakout right here. I actually took this trade. I didn't expect it, honestly. I didn't expect it to make such a big move down, you know. And actually I was worried that I'm not gonna, because I was going for 10 ticks, so I got out somewhere around here, and I was actually worried that this resistance is gonna hold. But luckily, you know, we got through. But you know, looking back at this, beginners probably will have a hard time taking this, but for more experienced trader, this was a good trade. So I marked it because I want to be transparent. I want to, you know, show the trades that I take even. So I'm not gonna lie to you, I actually took this trade. You're working lower, and at this point this bearish move is looking, you know, kind of strong, because if this is all the bullish move that we got here and it was, you know, turned down, I really like this trade at this point still, because you have a correction working higher, pullback, and a new high. So actually I like this trade too, because the market at this point is starting to make lower highs, and obviously it wasn't the perfect setup because we just, you know, needed a little bit more steam to get to this key level. This was actually a pretty good setup, but you know, market is starting looking kind of congestion like here. But yeah, just you can see that today is a perfect example how important it is to find those key levels. You know, they work like magic sometimes actually, and definitely don't listen to people who tell you market is random. Just train your eyes to see this, see the important levels that you need to find, and the market will reward you. And we are actually seeing two-legged pullback to the EMA, first entry, second entry from the EMA. I'm gonna probably make a video about second entry soon, because it is such a powerful setup. Second entries are so powerful if you know how to read the chart. Probably even if you don't know how to read the chart, second entry are very strong and very good setup. You can probably get like 60% just even without key entry points, just going blindly second entries. So I'm definitely gonna make a video how to recognize these. But I'm gonna wrap it up today. It's Friday, and hopefully you guys, you know, are getting better at reading the price action. Hopefully guys, this video was helpful to you. So I wish you a good weekend. Bye guys.